Good afternoon, everyone. This is our third lecture in our lecture series, and today we have here with us Peter Elson. Mr. Elson is the Chief Executive Officer at Gallagher Aerospace. He was previously selected to become Chief Executive of the combined Marsh JLT Aerospace business, where he also had the position of Chief Executive. Over his career, Peter has helped create one of the industry's leading aerospace insurance brokers, and he worked with airlines, aerospace manufacturers, airports, general aviation, most of the world's leading spacecraft operators, space agencies, rocket launch service providers, and Peter's clients' work encompasses, of course, sales, account management, risk program design, market negotiations and syndication, and also claim settlement. So also in case of questions related to disputes, please feel free to ask them. He is also European Mentoring and Coaching Council accredited executive coach. He is a visiting lecturer at the prestigious International Space University in Strasbourg, and of course at KU Leuven, and a fellow of the Royal Society of Arts. Peter has also served on a Ministry of Justice appointed independent monitoring board for a UK prison. He chairs also the board of Hope for Justice, an international group of charities dedicated to ending human trafficking and slavery, and he sits on the advisory board for the University of York Management School. Today, his lecture will be about space risk management and insurance, and he will explore the nature and the application of space risks, the evolution, structure, and dynamics of the specialist space insurer market, and how today risk management consideration influence decisions in mission planning. The overall lecture will last about 2 hours. During the last 30 minutes, the Q&A session will allow you to directly interact also with our speaker. Please, already during the lecture, write your questions in the dedicated section. And now, Peter, the floor is yours.
Okay, thank you so much, and good afternoon. I'm delighted to be with you today over the internet. I'm very much hoping that next year I'll be able to visit the beautiful city of Leuven again in person. Slide, please. Okay, so we're going to cover 3 main areas in this lecture. First, the fundamentals of space risk and insurance. Second, the insurance market for those risks. And then how do we go about constructing a space risk program? Slide, please. So let's start by identifying some of the key elements. Why insure satellite risks at all? Well, foremost, because insurance may be the principal tool by which private investors can protect the technical risk for their investment and recoup money when things go wrong. In the case of governments, of course, the taxpayer can foot the bill. And that's why most governmental organizations don't insure. Also because they want to put their money into the technology rather than insuring the risk. So organizations like NASA has a policy of not insuring. The European Space Agency actually has a softer policy. It can insure, does insure from time to time, but doesn't nowadays extensively insure its risks. That wasn't always the case. Maybe around 10 years or so ago, I was the broker, the agent, an advisor for the European Space Agency, and at that time we did arrange a comprehensive launch insurance policy for the agency, lasting over 10 years. And in fact, there was a loss that occurred under that, which was the Artemis mission, which was stranded in a low Earth orbit as after a 40 rocket launch, and a payout was made, an insurance recovery was made to the European Space Agency. But setting aside the government sector, for the commercial sector, insurance is the critical enabler of activity, noting that the capital costs are high and heavily front-loaded. And financiers, when they're involved, and they almost are involved, will always require substantial insurance to protect their interests. We must also recognise that there are some particular characteristics of risk and particular magnitudes of risk associated with space applications. And those risks are potentially catastrophic. The technology is very demanding and the space environment is highly challenging. Once launched, the hardware is remote and can't be fixed except by software changes on the ground or workarounds that are implemented also from the ground. So once the satellite, the geostationary satellite, is in orbit 36,000 kilometers away from the Earth, there's very little that can be done to repair it if it goes wrong. And there is no option, and if there is no option to salvage a mission, a replacement may take 2 or 3 years to build, launch, and commission. So that's a very big time frame to have to anticipate in a business plan to reconvene your commercial operations in the event of a loss of your spacecraft. Contrast that, for example, with the airline industry, which I'm also involved in heavily. In the case of an aircraft, assuming it can be landed safely, faults can usually be fixed. But if they can't, a replacement aircraft can be leased and put in service within just a couple of days. And that all has a very different implication for business risk and how space operators have to cater for those risks. In the case of third-party liability, of course, states are responsible for their space activity under the International Convention, and those states often require spacecraft operators to buy insurance as part of the licensing process, as part of the authorization process for those activities to take place. So companies devote huge effort and resources to ensure that space projects succeed, but they also spend lots of money on insurance. And here's a short video to illustrate why they do that. Slide, please. Thank you. That was a short video. Frankly, it's better with the sound of the explosion at the end. But that was a Russian rocket carrying 3 GLONASS spacecraft, and it's a reminder that simple things can go wrong. In this case, a guidance system being installed the wrong way round, even though the bolts should only fit the right way round. Unless, of course, we involve the element of human fallibility. And in this case, a Russian engineer with lots of determination and a hammer to apply the hardware. So launching rockets remains hazardous. What other risks do space projects encounter? On the hardware side, of course, the spacecraft itself, which is comprised of incredibly complex electronics and precision mechanical components, intricate systems and subsystems that need to survive the stresses of launch and must then deploy correctly because they only get one chance to do so. And then all of that has to work seamlessly without the possibility of physical maintenance for perhaps 15 to 20 years. recognizing all of these things are happening in the near vacuum of space and subject to extreme variations in temperature. Slide, please. If the launch has gone well and the spacecraft gets to orbit and works, we also need to consider environmental risks, in particular space weather. Mark Twain, the famous, well-known American author, Mark Twain commented that climate is what we expect, but weather is what we get. And the weather in space is no more predictable than on Earth. This picture illustrates a coronal mass ejection, a magnetic solar storm, and such storms pose a real threat to spacecraft. In fact, back in 1995, two Canadian spacecraft were simultaneously disabled by a solar storm. Both were partially recovered, but not before the risk manager lost his job because he'd taken the view that in-orbit failures were highly unlikely and therefore decided not to buy insurance for ongoing orbital hazards. Following that, the operator changed its policy and started to insure those risks from then onwards. I'm sure you'll also be aware of the Carrington event of 1859, which famously demonstrated that space weather can massively affect ground infrastructure when it caused havoc, for example, at that time, to telegraph systems. Today, we can only imagine the disruption such an event would cause. And in fact, we nearly found out in 2012 when a solar storm of similar magnitude to Carrington narrowly missed the Earth by just 9 days. Slide, please. And the space environment is also populated with huge amounts of man-made debris. I'm not sure if you can make out the themes very well on this, but the red dots on this chart are spacecraft in or around the geostationary ring. The yellow dots represent orbital junk, such as orbital stages, and the blue dots are fragments of missions. With the current trend for deployment of very large numbers of small spacecraft, the mass of material in space is rising rapidly, and with it, exposure to collision. And this brings closer, perhaps, a possibility of the Kessler effect, a significant collision creating a cascade sufficient to damage large numbers of in-orbit assets. And that's a scenario that you may well have seen simulated very graphically if you ever watched the film Gravity. Slide, please. And finally, in these categories of major risks, we're seeing more frequent and more sophisticated cyber attacks on spacecraft, in the same way as we're seeing increased cyber attacks on businesses and institutions around the world. Several incidents are known to have interrupted spacecraft operations and communications, for example, in China and the Middle East. However, many incidents go unreported because of commercial, political, and sometimes military sensitivities. And of course, also they go unpublicized to discourage further attack. Slide, please. So we've seen some of the risks, the major categories of risks that we're encountering. Who then buys spacecraft insurance? In short, anyone with a financial exposure to loss in the event that a damage or failure occurs, if something goes wrong with a space mission. Much of the demand, therefore, comes from manufacturers such as Thales, Airbus, Lockheed Martin, launch service providers like Aerospace or SpaceX, A lot of demand comes from, in fact, most of the demand today comes from satellite operators, organizations like Intelsat, SES Global, Inmarsat, Arabsat, and others. And some demand, not so much, but some demand comes from satellite users, broadcasters like Sky or NHK, and banks and investors like HSBC. Slide, please. Where then does the risk of loss fall? The answer depends on the contracts agreed between the mission partners. It's important to understand that the space industry operates on a first-party basis. In other words, it's normal for one of the mission partners to assume the risk of loss for a particular phase and extensively waive rights of recovery against all of the other parties. This approach creates efficiency in the organization and insurance of risk, recognizing the fundamental truth that launching and operating spacecraft is a risky business. Again, contrast this with the airline industry, where many parties may be involved in a single loss and share, in fact, they often share the financial compensation when things go wrong, sometimes after years of litigation. A single claim settlement could involve, for example, the airline, the manufacturer of the aircraft, the maintenance provider, air traffic control, security functions, and so on. The only common contract exceptions under space contracts, space procurement contracts, to waivers are gross negligence and willful misconduct. But these exceptions rarely come into play. They're rarely at issue. There have been exceptions to that. Have been occasions when those issues have been examined, and some are still ongoing. For example, there is a well-known case of the Boeing 702 spacecraft, which was a new development, new technology in the late 1990s, early 2000s, where a lot of development had gone into this new spacecraft platform. Unfortunately, part of that involved generating more power into the solar arrays by putting concentrators along the breadth of the solar array, effectively reflectors. They were just reflecting more sunlight in the solar array to generate more power, to allow greater communications capability from the spacecraft. Unfortunately, they didn't work. The concentrators had mechanical issues with their attachments, but they also pushed so much sunlight in that they effectively started to fry the solar arrays, and far from improving the performance, they degraded the performance. What was the problem with that for the insurance market and for Boeing and for the customer? The problem was that there were 6 spacecraft of exactly the same design launched in relatively quick succession over maybe 1 or 2 year period. The issue with the contract was whether the manufacturer, Boeing, had known at what point it knew or perceived some difficulties, some impairment with the performance of the spacecraft. And it may be we can speculate that they launched 1, they didn't see anything for a while, they launched 2, they still don't see anything, they launched 3. But the question arises, before they launched the 4th or the 5th spacecraft at the same time, had they seen any impairment, and should they have therefore withdrawn, stepped back, analyzed and reconfigured the spacecraft before they launched? That has led to the insurers, who paid out losses on all 6 spacecraft, trying to recover from Boeing some of their insurance payout. And I think some of that legal activity is still ongoing because of the perception, the allegation that this was somehow something that Boeing knew and should have acted on, but they didn't, and therefore forms part of the contract exception. In any event, contracts have followed 2 main generic paths, either delivery on the ground or delivery in orbit. In the first case, the manufacturer supplies the spacecraft and the launch and the insurance, delivering to its customer a spacecraft in orbit on station under a turnkey arrangement. In the second case, delivery on ground, the spacecraft is delivered to the operator by the manufacturer at the launch site, most often at the point of launch. So they take possession of it, they take title at the intentional ignition or liftoff of the rocket. What does that mean in practice for the risk? It means that then the operator, rather than the manufacturer, has responsibility for buying the insurance. Going back 10, 15, 20 years, a lot of contracts were written on a delivery on in orbit basis. Today, almost all contracts are written as delivery on ground. That's because operators have become more expert at procuring launches as well as spacecraft and at procuring insurance for their risks. We also sometimes see something called a launch risk guarantee from rocket service providers. That is a guarantee which says, in effect, if the launch fails and the mission is lost, the launch service provider will do one of two things: either refund the cost of the launch or provide a replacement launch for a replacement satellite at zero cost. And as previously mentioned, liability risks can flow from launching states through to launch service providers. Slide, please. What type of cover is available from the insurance market for these hazards? Principally, cover can be bought for physical loss, damage, or failure of the hardware, the property of the spacecraft itself. Insurance is also available for third-party liability to people and property. And whilst to date we've seen little in-orbit activity, the insurance industry has paid claims for people who have tragically died and for property that's been destroyed when launches have failed early in flight and rained down in the vicinity of the launch site. There's been several occasions of that, and one, probably the worst, was in China in the 1990s, when a number of people tragically lost their lives and property was destroyed, leading to a number of millions of dollars of insurance payouts for that event. Additionally, businesses can lose revenue, of course, and that happens when their communication services are interrupted and their customers are no longer obliged to make the payments that they are set up to make under their customer agreements. And there could be additional costs of reworking. For example, if a spacecraft goes out of action and we have to shift services to a different spacecraft, there may be costs, for example, of repointing dishes to the new orbital location from where those services are broadcast. And just a brief word about manufacturers' incentives and warranties. It's very common for manufacturers to put into their contracts an element of risk. Some of the contract value is at risk based upon performance. And in the past, these exposures were routinely insured. Nowadays, it's unusual because buyers became aware of manufacturers doing this and buying insurance for their incentives. And now most operators will contractually prohibit such insurance because they want their supplier to have a real financial incentive for success and therefore to retain the risk rather than insure the risk elsewhere. Okay, so let me go on to talk about the next slide is going to depict a rough guide to premium rates. The reason for this is to give you an idea of the quantum of risk as it translates into the pricing of insurance for those risks. So how much, therefore, could it typically cost to buy these types of insurance products, for these insurance policies? For pre-launch cover, that is the period prior to launch, the transit from the manufacturing facility to the launch site, the storage up until the point of launch. The insurance market charges rates of around 0.5%, 0.5% to 1.5%, depending upon the pre-launch risk profile. For launch, in orbit, and commissioning, the market standard is to bundle the launch, commissioning, and the first year in orbit, and to charge rates in the region of 5% to 13% for the majority of launches, but some may attract prices of rates of over 20% if they're considered to be less reliable or less proven launch systems. And these rates are applied to the amount of insurance. For example, a satellite that is insured for $100 million, paying a 10% rate, will cost $10 million in premium. For in-orbit cover, for each year of operation, premium rates are around 0.7% to 2% per annum, depending upon the health of the spacecraft, which is assessed on an annual basis. And of course, that in-orbit premium cost accumulates over the spacecraft life, noting, however, that the value of the spacecraft will depreciate year on year until the end of design life or operational life, when its value becomes zero. So the cost of insurance, there may be an annual event, an annual cost. The rate may be the same, but the actual cost goes down because the sum insured is reducing. Third-party liability is relatively cheap to insure. For launch, the market charges rates of around 0.15% on the sum insured, the indemnity that's provided. And those indemnities are often around $100 million. It could be up to $500 million, but most often $100 million. And for in-orbit liability, and here we're really talking about the risk to other spacecraft once they've been launched, the price is around 0.075% per annum. You can see, or you could see, if you could see the slide, from this, that the costs, the overall insurance costs, are heavily concentrated around the hardware rather than the liabilities, and that the particular cases of loss that generate most risk and most premium and most cost for operators are those that occur from the point of launch onwards. This is where all the money is. It's a significant cost, and therefore the area where we will concentrate most of our discussion as we go on to examine the subject of insurance in more detail. Okay, let's look at the characteristics of or talk about the characteristics of the market that supplies space insurance. By way of introduction, space insurance is considered a highly volatile market, characterized by a very narrow spread of risk and demanding great technical expertise to understand and price policies. In point of fact, in its early days, when risk analysis was very rudimentary, many insurers stayed well clear of space because they viewed the sector at that time as little more than gambling. Okay, let's run through the evolution of the market briefly, how we got to where we are today. Policies, insurance policies for space began to be written in the 1970s, prompted by the start of the commercialization of space. That was really the trigger for the insurance market to become involved. Initially, the market only offered cover for third-party liability, nothing more than that. But we then saw in the 1980s the emergence of a specialist market prepared to cover space missions, in effect the property against the risk of failure. And by the mid-1990s, we have a market that resembles the market today, able to offer comprehensive protection to buyers. From around 1998 to 2002, we saw a sea change in the insurance market. We saw a convergence of challenges. The market itself had become overly competitive. A lot of capital was looking for high returns. Much of it was going into technology as well as into insurance. And we saw that in the 1990s there was a tech bubble, and that bubble burst. The mantra of faster, cheaper, better was embraced, but not actually achieved, with many failures of rockets and spacecraft. Pretty much the manufacturers of spacecraft and rockets were able to succeed in faster, and they could succeed somewhat in cheaper, but they didn't succeed with better. And we saw numerous space industry failures during that period of time, such as ICO, Global Star, and Iridium. And the case of Iridium is a good example of the damage that was done to the space industry and the investors in it. Iridium was, still around today, but it's a resurrection of the original project. Iridium was a project for around 77 or 72, I should say, spacecraft in a low Earth orbit constellation, designed to provide mobile communication services, telephony, in all corners of the world. Actually, by the time it was launched and deployed, the world had moved on with roaming agreements for cellular phones, and the technology itself didn't work as well as had been hoped. You had to have certain conditions, and you couldn't phone from indoors, you had to phone from outside, these sorts of things. And the handsets were quite big and clunky as well. The net result was that project, which cost $3 billion to assemble and deploy, they went bankrupt, and it was sold for $25 million. So you can imagine that, along with the other failures that occurred at the time, this was a big blow for the industry, a big blow for the expected expansion of applications in space. The result of all this was a crisis for insurers, and many players withdrew from the space insurance market in the wake of around $1.5 billion of underwriting deficit. So in other words, in this period of time, if you were involved in the space market and you wrote everything, every risk, you lost $1.5 billion. And in fact, insurers suffered a double hit. First, paying out all of those claims, but also through experiencing a dramatic reduction on their investment returns. To some extent today, but much more so in the past, insurer earnings have relied on making returns on premiums which they receive and invest into financial products. Back in this period of time, most of their profits came from investments rather than from underwriting. And that mentality fueled market competition, because some insurers weren't really worried about loss events. They just wanted to receive cash to put it into financial markets to make money on the money. But that process stopped. It stopped after the tech bubble burst, and there was an Asian financial crisis, and they had to refocus, insurers had to refocus on making money from insurance, selling insurance, rather than from making investments. Okay, so, but out of that crisis came the seeds of recovery for both the space industry and their insurers. In the decade from around 2002 to 2012, we see technology innovation slowing, as a result of the events that preceded it, and because of that, we see reliability improving, and in turn, insurance results improving. As is the way with supply and demand, the $4 billion of profit that insurers made in that period started to attract new capacity and new players. Anytime that supernormal profits are visible and available in a sector, it's going to attract new entrants. And that's exactly what happened in the space insurance market. New entrants came in, they competed for business, and that competition starts to drive down rates, drive down pricing, insurance pricing again. Slide, please. As we therefore saw between 2012 and 2018, we're seeing from 2012 onwards to date, capacity levels have been high, competition has been strong for a reducing premium pool. And it's important to understand that some challenges remain, such as a narrow spread of risk and increasing sums insured. Insurers' results over this period of time have varied considerably, depending upon which risks they underwrote. What we see when there's an abundance of market capacity, an abundance of supply, it means that to complete a placement for a policy, you don't need all of the insurers to write it. So only those that succeed most, that compete most successfully, will participate. So a lot of insurers will be missing a lot of the business that's available in the marketplace just because they were too expensive for that particular risk. Because of that missed factor, their individual underwriter results are driven very heavily by, were we lucky or unlucky? Did we write the risks that all went well, or did we write the risks that all went badly? So we see this very different experience from insurers across the market, depending upon which risks they were involved with and which risks they missed. And this process is continuing, and it continues until we encountered another crisis from large losses in the second half of 2020. And we saw that there was not enough premium to pay for those losses, particularly in 2019, when the experience becomes especially severe. And so the cycle, the insurance market cycle, returns. Markets withdraw, insurers withdraw, supply contracts, and prices rise again. And that's what we've been seeing in the last 18 months to 2 years. Slide, please. So let's look at some of the numbers. First, on the demand side, this graph is depicting the number of satellites launched year on year, broken down by different categories of geostationary satellites, LEOs, CubeSats, and Starlink, which gets its own individual billing. So what we see here is that from 2000 through to perhaps 2012, we have kind of broadly similar levels of activity. But from 2012 onwards, we start to see that the level of activity, the level of number of satellites is increasing. So in one sense, demand is potentially growing as the number of spacecraft launched also grows. Except, as you can see from the categories here, much of the small satellite segment is where that expansion of demand has come from. And today, much of that low Earth orbit and CubeSat and Starlink segment is uninsured. Because these assets are much less valuable than large geostationary spacecraft, which operators must insure, and they're more expendable, more easily replaced than large spacecraft. So in one sense, the potential demand excuse me, has increased very significantly, but the actual demand hasn't, because those new space players are not yet coming to the market to insure their risks extensively. And it's very clear that even in very simple terms of numbers, with the expansion of small satellite activity, the deployment of Starlink alone, which isn't insured, represents a huge part of the increase. Slide, please. Okay, so this next chart shows you the number of launches. The last one was the number of spacecraft. This is the number of launches. And you can see that it's also rising in recent years, and particularly from the same sort of period, 2012 onwards. There's a steady increase, but it doesn't anywhere near track the huge increase in spacecraft put into orbit, because of course small satellites are most often launched together in batches on a single launch. And you'll also see that in terms of the pure number of launches, around half of those launches are insured, so around half aren't insured. That includes, getting back to what I said earlier on, a lot of those governmental missions, but also some of those low Earth orbit missions as well. Slide, please. So if we move from the demand side to the supply side, this chart, this graph depicts the capacity available. Capacity, by capacity I mean how much insurance can be underwritten, can be offered by the overall insurance market. So it equates to the supply. That supply can be deployed, by the way, for each launch. And so what we're seeing here is that the maximum amount that can be insured for a single launch, if we utilized all of the insurers that are currently participating in space insurance, we could insure a single risk for up to around $800 million. Bearing in mind that some launches, such as Ariane, can put up 2 large spacecraft together on a single rocket. When that happens, the amount of insurance can get quite close to the maximum. In other words, not far away from running out of supply, because each of those 2 large spacecraft on an Ariane launch could be insured for something like in the range of $350 to $400 million. You can see from the chart there are around 40 insurers involved in the sector, with particularly large concentrations, the pie chart on the right-hand side, particularly large concentrations in the UK and continental Europe. And these insurers are a mix of large insurance companies and reinsurers, Lloyd's syndicates, and specialist agencies, known as managing general agents. And those are organizations which don't actually carry the risk, but they deploy risk expertise, specialists, to underwrite risks on behalf of other companies. And it's those other companies who are the parties that bear the risk of loss. The MGAs, the managing general agents, are paid for their expertise in attracting, pricing, and managing insurance policies for them. Slide, please. So in this graph, we plot capacity, again, or supply. This is another way of saying supply. We plot supply against typical prices for launch insurance. So the blue bars represent the total supply year on year from 2000 to the present. The red lines show the typical insurance pricing for launch insurance in each of those years. And the effect is very clear. It's very visible here. When supply increases, prices are driven down by competition. And so you see that from 2004, 2005, through to 2018, 2019, you can see that the prices are reducing steadily. That red line is declining. That's because capacity supply is increasing. But equally, you see at the start of the chart from the year 2000 to 2004 that capacity supply contracted very quickly, and that caused that quick spike in premium rates, in prices, the price of insurance. Similarly, we see a little bit of a dip from 2019 to 2020, and equally there we see that prices have started to increase. And that's a very typical effect that you'd expect in any market. When supply contracts, prices go up. Slide, please. This may be a little bit of an eye test, I'm not sure, but what sorts of things can go wrong and produce claims against insurers? Well, here are some recent losses from 2018, 2019, 2020, and 2021. And they demonstrate a variety of launch and spacecraft causes of failure. To pick out a few notable events, 2019 was a poor year for insurers, when amongst two other large losses, we saw the largest ever single loss in Falcon Eye. That was over $400 million paid out following the failure of a European Vega rocket. 2020 was better, but not good, but better, with a lower quantum of claims, but still major losses from a Chinese Long March rocket and several anomalies on Russian spacecraft. And 2021 has begun with a major setback for insurers, with a potential loss of Sirius SXM-7, which experienced a payload anomaly during in-orbit testing. And that could lead to a claim of around $225 million being paid. To put that in context, to put that $225 million in context, excuse me, that loss equates to roughly half of the total market premium expected for the whole year, for the whole of 2021. So insurers are in quite a difficult position. They're feeling uncomfortable. Right at the start of the year, they see half of their overall revenue wiped out by a single loss, and they're hoping they won't see any further losses for the rest of the year. Slide, please. If we look at the breakdown of losses between rocket and satellite failures, excuse me, if we look at the breakdown of losses between rocket and satellite failures, we can see variations year to year based on the relatively low numbers of events. So when you're only having 2 or 3 or 4 losses a year, of course, the causes of failure can swing quite rapidly from one cause to another. But overall, you'll see that if we take the satellite losses versus launch vehicle losses, the overall split is more or less even over a period of time. And that compares with the long-term trend going back to the early days of spaceflight, where maybe over 20 or 30 years or so, rocket failures accounted for around 2/3 of all losses. And there were probably proportionally fewer satellite failures in that period of time. We can therefore surmise that in the commercial sector, rocket performance has improved relative to spacecraft performance. Slide, please. If we circle back to insurance rates this chart shows the evolution of pricing for risks over the past 30 years. The blue line depicts launch insurance rates, normally bundled with commissioning and the first year in orbit. The variations are primarily driven by supply and demand and by insurers' reaction. Okay, so the variations are driven primarily by supply and demand and by insurers' reaction to either good or bad loss experience. They're also driven to some extent, and quite often to a reasonably large extent, by insurers' results in other sectors of insurance. For example, if other sectors, and here we're talking about things like marine insurance or aviation insurance or energy insurance, if those areas are performing better, insurers will redirect capital to those sectors and away from space. And vice versa, if they perceive more opportunity for profit in space insurance than those other sectors. Almost all of these insurers are writing multiple lines of business. So when they look at their portfolio, they look at different markets and decide where they wish to deploy their capital. And they think about whether space insurance is a good proposition, whether any other types of business, financial lines or marine or whatever it might be, are better or worse propositions. And they can quite quickly redirect their capital to where they see the best opportunity. Slide, please. Okay, so if we bring that all together, the demand for spacecraft insurance, the profile of supply, pricing changes year to year, and the incidence of claims, how has the market performed? As I said, the blue bars here on this chart are the overall market premiums, the black bars are the total claims, and the grey bars are the resulting level of profit. Good levels of profit through 2017. I mentioned the problems in 2018 and then 2019, and so we see again that there's a correction in pricing from 2019 onwards that we saw in the previous chart. One further important parameter to note, which is the line running across the top of the chart, that is the peak values insured year on year. In other words, the largest amount of insurance that was placed in each of those calendar years. Contrast here the line for the first half of the period, when the premiums, the blue bars, were generally higher than the largest sums insured. And contrast that with the years from 2015 to the present, when the overall market premiums drop below the peak value. This creates a tremendous challenge for space insurers, bearing in mind that insurance is based on the principle of the premiums of the many paying for the losses of the few. But you can see here that today, for space insurers, just one single loss in a year has the potential to exceed all of the premiums in that year and result in a financial deficit. So one single loss can destroy the profits for the whole year for the insurance market. Okay, slide please. We're now going to consider how a space venture may go about constructing a coherent risk program. Slide, please. First then, what does the risk planning process look like? So analysis can be made in each of these streams for contractual, legal, and financial streams, and above all for the technical profile. You can see that some of the material that we're examining here are under the contractual stream are the supplier contracts, under the technical analysis, engineering documents, performance specifications, legal analysis for regulatory requirements, licensing, international transactions, financial analysis, the business plan, equity partner requirements, financing obligations, and so on and so forth. All of that analysis results in a risk management plan and a decision to either self-insure, to retain the risk, or to transfer the risk, and in particular to transfer it to the insurance market. More than most areas of insurance, well, in fact, almost any other area of insurance, the technical risks for space are individually assessed because there are insufficient numbers of risks to perform a purely actuarial review, and each risk has different characteristics. Consequently, insurers employ qualified spacecraft engineers to do this through a process of technical presentation, provision of design and engineering documents, and extensive question and answer processes. Slide, please. And how can we make sense of all the risks we identify? Well, we can go through a methodical process where business risks must be identified, analyzed, quantified, and prioritized. And then we get into the process of solutions and modeling those solutions, evaluating them, and implementing the chosen solutions we have for our risk program. We can employ some tools in ranking and prioritizing risks, such as a heat map. And on the right-hand side, you see this is a very basic illustration, plotting impact and frequency or probability. And it's very easy to imagine that launch failure would appear, of course, in the top right-hand box, being an event that these events occur frequently, and when they do, the impact on a mission is high, most often catastrophic. Slide, please. Once we have a risk plan, how could the purchase of insurance progress? This chart shows a typical campaign, and you will see this is a very demanding process that can extend over a period of months or years before the product is finalized. Buying spacecraft insurance is complex and requires expertise from a broker, an intermediary, to facilitate, negotiate, and syndicate a risk. Bearing in mind that for most policies, around 20 or 30 separate insurance companies will be needed to complete the placement. Slide, please. There are a number of key building blocks for creating an insurance policy, starting with confidentiality and export licenses for protecting commercially and sometimes nationally sensitive technical information. And we see this most keenly with US data, which is strictly governed by the international traffic in arms regulations. And it's very interesting that going back again to the 1990s, the interaction between the USA and China was over space activity was intensely scrutinized. And there was a report called the Cox Report, and that report cited insurance as an unintended conduit of technology transfer between the USA and China at the time. In other words, the insurance market was receiving information about US spacecraft being launched on Chinese rockets, because Chinese rockets at the time were very competitively priced. And there was concern that information was being gained by China from the USA and facilitating technological knowledge that wasn't intended or desired by the USA. As a result of that report, the US stopped US rockets being launched on Chinese US spacecraft being launched on Chinese rockets. But insurance was cited as a conduit for some of that information transfer. To assess risk, insurers will need to analyze the mission, details of the spacecraft architecture, contracts and technical specifications. This often involves market meetings, perhaps in London or New York or Paris or all three, where the customer and suppliers come together in person to allow the exposition of the risk and detailed questions and answers. In fact, depending on the level of complexity and innovation in a mission, this technical process can stretch over weeks or months or even years in some cases. But once insurers believe they have sufficiently understood the risk, we move to a term sheet outlining the insurance coverage sought, followed by negotiation of the conditions and pricing of the insurance, and ultimately to an order for the full and final insurance contract. Slide, please. Once an insurance contract has been made, insurers will still expect both pre-launch and post-launch briefings to provide them with updates on mission progress. This helps insurers to broaden their knowledge, which can be applied to future risks they are called upon to assess. But most importantly, it allows insurers to monitor whether the risk itself develops as expected and any potential vulnerabilities for the mission that may lead to a claim. And if during construction the spacecraft configuration is changed, insurers have the right to renegotiate some or all of the terms of the insurance under what's called a material change clause. So, but how could the risk change? Well, perhaps, these are the obvious examples, because a sister satellite, a sister spacecraft or rocket has developed an anomaly or defect, and the manufacturer introduces a rework or redesign to correct the fault. Of course, that's a good thing to happen, and insurers want that to happen, but nevertheless, it's a potential change in the risk profile, which insurers reserve the right to address if it occurs after they have agreed the original insurance contract. Slide, please. What then are the key features of the insurance policy? Well, we have the interest, that is the subject matter of the insurance. What are we insuring? The sum insured. How much will insurers pay out in the event of a valid claim? The policy period being the window when the risk must occur to trigger the start of cover, and the coverage period. The coverage period being how long cover continues once risk has attached. I think we're on the wrong slide now. Thank you. Of course, we need to define how we quantify a claim, and there are three principal cases. Total loss, which means the complete loss, destruction, or failure of the mission. Constructive total loss, being a substantial loss, but less than a total loss, however, still sufficient to require that the mission be replaced. And today that threshold is usually 75%. In other words, if more than 75% of the mission is lost, more than 75% of the operational capability of the spacecraft, insurers will pay the full sum insured in recompense. In these circumstances, insurers are entitled to salvage, to take title to the spacecraft and any residual value or revenue potential it presents. And then finally, the third category, for smaller losses, we must define partial loss, whereby the insured is reimbursed for loss of a part of its mission, but not so much that it constitutes either a constructive total loss or a total loss. Slide, please. So what concepts do we employ to define the impact of something going wrong? First, transponder failure, which is considered to have occurred when a transponder fails to operate in accordance with satellite performance specifications after use of all redundancy and spare components. And insurers will usually look for standard margins in the spacecraft performance specifications that apply before a claim is paid, notably for power and fuel, where they often look for 7.5% power minimum margin throughout mission life, other than during eclipse, and for fuel minimum of 12 months fuel at the end of the mission. And if those minimum margins aren't available, insurers will often look for a deductible to apply in place of them. The loss formulae can be extremely complex, but this is just a really simple depiction of it, which shows you the basic process, and that is to compare the nominal operational capacity, the number of transponders, discrete communication paths through the spacecraft, compare the nominal capability, and how long, so how much of the satellite is available, and how long they're designed to operate. And we compare that with the actual operational capability, that is, when a loss happens, how much capacity is left, and how does that compare with how much was expected, and that will give us the quantum of loss. And you can see this, it's a very simple example here, that if we have a spacecraft which is designed to last to operate for 12 years, and it has 40 transponders, that gives us a sum of 480 transponder years. That's our baseline. So any loss will be measured against that baseline of what was expected, those 480 transponder years. Slide, please. And what are some of the risk features that affect the shape of a mission and the price and conditions of insurance? What decisions and trade-offs need to be considered? So, the rocket itself, the launcher configuration, the heritage and reliability. Does the operator go for the lowest cost or the highest reliability? Because these aren't going to be the same rockets. They may be very different propositions. What does that tell us about the risk? What does that tell us about how we want to plan our mission and the types of and the finance we have available for it? We need to talk about the spacecraft heritage. It's redundant. How much redundancy do we build in? How much fuel and power margin do we build in? What sort of payload complexity is being considered in this mission? And what impact does all that have on the cost of the mission and, in fact, the cost of the insurance? Because it may be that you've saved in one area, but you pay out in another. So if an operator chooses the cheapest rocket that's available, it may have to pay more for its insurance, which negates some or all of that saving. It may pay more for its insurance because it's viewed as a riskier proposition, plus it's a bigger risk to the project, to the business that's being contemplated. We might think about the sparing and replacement strategy on ground or in orbit. What happens if it goes wrong? What happens if we lose the mission? Do we have a spare satellite on the ground in construction that we can relaunch? What would we do in those circumstances? How would we manage that risk? Operators need to think about the license conditions and frequency coordination. License conditions, sometimes there is a requirement to launch within a certain time period or potentially lose the orbital slot and frequencies that you have acquired. And that may drive some behavior in terms of the risk of the mission and the configuration of the risk of the mission compared to the speed of getting into orbit. We have the revenue projections to think about, perhaps things like pre-sold capacity. If there is capacity that you're already selling, that you've pre-sold prior to launch to customers, can we ensure against the loss of the mission for that loss of revenue in addition to the loss of the asset. Things like ground station and infrastructure costs also should be contemplated, particularly where those costs are significant in relation to the project. We need to go through the procurement contract terms, incentives and warranties, and consider whether any of those features are effectively giving us or mitigating the risk that we're accepting in this project. Cross-border constraints, I mentioned the situation of US components and Chinese rockets, and the fact that these cannot be utilized in that way. But also opportunities with different territories. For example, in terms of export credit agency finance that's available. If we buy, a European rocket or a European spacecraft, can we get some finance from COFAS, for example, or in the US, can we get finance from Exim? All of those things may influence the suppliers that the project chooses and the risks associated with those suppliers and the hardware that they're providing. And we also have to consider the commercial insurance conditions. Is it a buyer's market or a seller's market? And what leverage do we have? Are we a single satellite buyer, or do we have a fleet purchase that might generate a better price? At the end of all this, insurance is a significant part of the business plan. In fact, it's often the third largest cost of a mission after the spacecraft, the satellite, and the rocket. So it forms an integral part of the planning process. And insurance will normally itself be insured, because if a mission fails, the operator will need to buy another satellite, another rocket, and another insurance policy. So the insurance itself is insured, which adds to the cost for operators. Slide, please. So that's where the insurance market stands today. What trends do we foresee driving the industry in future? First and foremost, and this is very well known to everyone here, I'm sure, new space. There is a huge expansion in activity going on as we speak, and what direction that's going to take is a little uncertain, but it is happening right now. We're seeing accelerated technology development and better reliability, I think. And both of those things, the acceleration of technology and the better reliability, are enabled to some extent by experience. Space exploration and utilization is no longer new as it was in the 1970s and 1980s, but also by the possibility of improved simulation and improved modeling capability that's available today. We're going to see reducing costs in the access to space, and that's through new launches, lower cost launches, and whether that's small launches for small spacecraft, or whether it's SpaceX, and the concept of reusability, reducing cost over a period of time, or the onset now of electrical satellites, which offer far longer lifetimes than were available with satellites which relied upon chemical propellant. So we're seeing things like space tourism and travel, and very notably, it's in the press again this week, Virgin Galactic, and it's been promised a long time, but it looks like it will be finally coming to commercial operation fairly soon. And we're seeing increased threats from space debris. All of these spacecraft that have been thrown up into low Earth orbit are posing more and more risk. At the same time, there's more and more attention being paid to observing and managing those risks. And of course, space weather. It's not that there's any more space or less space weather than there was in the past, but of course there are more assets in orbit today that could be damaged by an event. And finally, from an insurance market's perspective, insurers and brokers face the challenge of how to adapt their products and services to support emerging risks. In particular, how do we get hold of this shift from large spacecraft to small spacecraft, from high-cost projects to more agile, more expendable, low-cost assets, and from asset insurance to business and revenue stream insurance. These things which are posing challenges on the way that the insurance market is structured today, and how it will need to adapt its structure to the future. And beyond all that, of course, also the change in emphasis we're seeing from covering property to people, and the liabilities associated with those people traveling into space, not as crew, but as passengers, as tourists. This is going to be a fundamental change in the focus of the insurance market for space risks. It hasn't dramatically changed the market today, but it's going to, as those possibilities, those projects progress and become commercial in the coming years. Slide, please. Whatever happens, in my view, the future of space will be exciting, and we will continue to be confronted by risk and the need to manage that risk. And on that note, I'd like to end my lecture with the words of Gene Cernan, who today is the last man on the moon. I'm really hoping that that won't be the case for too much longer, that there'll be somebody else going to the moon soon. But today, the last man on the moon. And Gene Cernan said, the exploration of space, like the exploration of life, if you will, is a risk. We've got to be willing to take it. So I hope my comments have been somehow useful in giving you a small insight into the world of space risk and insurance. And I'd be delighted to take any questions that you'd like to now ask.
Thank you very much, Mr. Peter Elson, for this very fascinating presentation on space risk management, especially given your expertise, long-standing expertise. I think it was a very insightful comments that you could give to the audience, which will have noticed that my colleague Julia has dropped out in the meantime. So I will take over this little Q&A session. But yes, as the expertise lies with Julia, I'm afraid that I will not be able to make as substantive comments as she would be, but I would still like to give the audience, and especially the participants, to have their questions addressed. So I will just pass on the questions that we have received in the meantime from the students and from everyone who has been attending for you perhaps to consider. And I will just group them a little bit. So we had two very curious questions coming in regarding what you think, Mr. Peter Elson, which are the most relevant global risks that space agencies should pay more attention to, and how can sustainability be specifically considered in the risk management progress? So these questions came from Roberta Grigori, if you would mind answering them.
Okay, well, I think, well, great questions. I'm not sure I'm terribly qualified to answer, but I will try anyway. I think in terms of risks, I think we always have the risk of the reliability of hardware not working, but we can retire that risk to a large extent by stopping any evolution or development or innovation. But of course, stopping innovation would be a ludicrous thing to do. So there is an underlying risk of innovation. Anytime you want to do something new, it creates new risk, and we just have to accept that. I think, and we should accept it. And the insurance industry has played a really important role in covering and protecting some of that innovation. It does take on unknown risk. That facilitates that process. But of course, much of the process also has taken place historically with governmental agencies. Some of that shift is coming away from governmental to commercial enterprises, in fact. And so the insurance market becomes more important when the taxpayer isn't available to fund those things. But if we move beyond the innovation, you know, I think that there are environmental hazards which are heightening. You know, we have to get to grips with the debris that's going into space. You know, right now what we're doing is we're just avoiding it. What we're doing is we're saying, well, let's track it better and better, and just hope it doesn't hit. The problem with that is that it doesn't always work, and sometimes we only know what we know. So we've seen lots of spacecraft which have been disabled partially or wholly over a period of time, when we never actually get to find out what exactly happened. So you know, it's one thing tracking a big lump of debris and we can see it, you know, but a fragment which we can't see, we don't know whether those some of the losses that have occurred have been because of those fragments of debris. So but whatever anyone thinks about it, the answer isn't simply to keep kind of patching over and finding workarounds. The answer has to be to start removing the debris, and at some point we will get to grips with that. Why haven't we done that to date? Well, I would argue one of the reasons is that, first of all, we find it hard to attribute liability for these things because we don't exactly know the legal framework, and we don't exactly know what fragment has caused what loss. And the insurance market itself is quite reactive. What I think will happen, and this is not the right way around for it to happen, is that at some point something significant is going to happen. Something significant is going to be damaged by some debris, and then the industry and the agencies and commercial operators will move on and say, okay, well, let's stop trying to avoid the issue by maneuvering our spacecraft, and let's deal with the source in the same way we're dealing with pollution on the ground. That ultimately the polluter should pay, and if the polluter doesn't pay, then they don't stop polluting, and that's what we're seeing today. So I think that environmental risk. I think the two risks I would say are innovation, and I think, you know, the insurance industry should absolutely support that, and as it has done in the past. And I think the environmental risk, the environmental space is different. Beyond that, what else can we do? And I think the question is a little bit broader about sustainability and the environment. Of course, in the same way that the aviation industry is adapting, so the space industry is adapting as well. You know, and there's a flow through here. Now, today, you know, if I walk up outside of my house, I can see 3 or 4 Tesla cars parked in driveways. I can see other electric cars. I couldn't see any electric cars 10 years ago. Now, aviation is aircraft are a big polluter, but they're looking at developing alternative fuel possibilities for air travel. In the same way, the space industry needs to get away from some of the highly toxic, polluting technologies that it uses currently into a much greener environment, and that's going to happen. You know, one of the things I'm quite fond of saying is that companies may not be very worried about ethics and sustainability, but the ethics and sustainability are very worried about companies. So whether you like it or not, you're going to have to do something about it, and that is happening, and it will happen.
Thank you very much for this. Trying to find somehow the balance, the transfer to the next questions, of which we still have 4. So also perhaps thinking along this in innovation lines, one question came with regards to what your thoughts are on spaceports insurance. And 2 questions, if I may also group them together already, are more regarding your context being based in the UK. So one is, if you think, or what you think, what is Brexit going to have of an impact on the space insurance market? And also another one more or less related to the UK. So one of the attendees seems to recall that a few years ago in the UK, there were a lot of discussions around the traffic light system. And if you have any updates with regards to this and whether this has progressed.
Okay. So I think the first one was spaceport insurance. So
The space insurance, yeah.
Yeah, spaceport. I mean, spaceport. I mean, I think it's very exciting to see spaceports developing, and you know, and talk about spaceports here in the UK. I mean, and so what is the insurance aspect? Well, the insurance aspect really is quite similar to the insurances that we've already talked about. The additional level of insurance is that, again, as soon as we contemplate the commercial world rather than the governmental world, we have to think about how we're going to protect investment. And so the additional aspect there to consider is the infrastructure, the ground infrastructure, and how do we protect that? Well, insurance is available for that. It's in many ways a less complex insurance than the rocket or the spacecraft, because here we're talking about property. Now, the property has some particular characteristics in being a spaceport, but it's not so much different from other property on the ground. Where we have encounter the most technical risk. Now, there are exceptions to that. For example, the environmental risk around the spaceports themselves, but where we encounter the really different risk that space brings is in the technology in the rocket and the spacecraft itself. So spaceports are eminently insurable. We can provide cover for those installations, and the market may take a little bit longer to assess the risk than it would assess the risk of a food processing factory or something. But fundamentally, the coverage and the risks, the coverage and the insurance available are quite similar. Maybe you might need to remind me of the next question.
Yes, the other ones were very UK specific. So the traffic light system, if there has been any progress, and what kind of impact Brexit will have on the whole space insurance market in your view.
Okay, well, the traffic light system, I'm not able to answer that question, so I'll go on to Brexit, but I can say something about Brexit.
Please do so.
So Brexit is, you know, well, we're actually in very early days. We're only a few months into Brexit proper, but I can tell you it's already having quite a big impact on us. One of the things that's happened in the last 20 years is that there was an assumption that the insurance market was going to regionalize. You know, Lloyd's and London have been historically great centers of insurance, and I think everyone thought that this was going to dissipate. That hasn't happened, actually. What has happened is the opposite of that. In fact, more capital and more expertise have located in the UK, and in particular in London. Why is that? Well, it's because of the regulatory environment. It's also because of the tax environment, and it's also because of fundamentally the environment for talent. And so what happens with talent is it congregates in the same area. And it's like the classic economic case of the two ice cream sellers on the beach, who would be most convenient if they located either end of the beach. But actually what happens is they migrate to the center point of the beach, because that's where they're incentivized to be. But so talent has really congregated, and so capital from overseas has come to London. Now, over that period of time, Brexit poses a significant challenge to that. And it poses a significant challenge for us, even in our daily operations. So today, I can tell you I'm employed by Gallagher in the UK. I'm also employed by a company called Nordic in Sweden. and so what I'm called, along with a number of my colleagues, this thing which is called a double hatter. So in the case of a European client, I'm delivering service to them in my capacity as an employee of a Swedish company. For a client elsewhere, I'm delivering service in the capacity of my UK contract. This is a complication, and it's a complication because even though I can do that, we can't have everybody in our organisation and all organisations being employed by by both a UK and a continental European entity. It's very clunky and clumsy. So so Brexit is already interrupting the flow of services and the flow of expertise to customers in both directions, to and from the UK. And that isn't very satisfactory for anyone. I'm not like, I'm sure like an awful lot of people on the call on this meeting, trade barriers are not something I think are good. I think they should be taken, they should be removed where possible, because it's good. It's in the common good. We can grow through exploiting cross-border efficiencies in what we do and building collaborations across territories. Brexit has interrupted that and has introduced inefficiency and cost, and it's going to make it more difficult for clients to access the expertise and the supply that they want and they need to support their projects. So it's already had an impact. If I send an email today, I have to think about whether it says I'm working for Gallagher in the UK or working for Nordic in Sweden.
This actually brings up a very interesting follow-on question. So we've been more on the nationalist perspective side with Brexit, but then you also made quite a good transfer to the international multilateral setting. And I had a question coming in that if you think space insurance companies should be involved as relevant stakeholders in a multilateral dialogue, or maybe is there already any existing mechanism that allows this?
Yeah, okay. So yeah, I think the insurance market should be involved. And I mentioned earlier on, the market is quite reactive. So it underwrites business and it's very receptive in this particular area, because we're talking about a particular type of insurance here with satellites. It's receptive to new risks, but it's responding to the risks which are presented, and very often responding to the claims that come into the marketplace. Would it be good for the market to have a more proactive stance? Absolutely. And I think we try to do that to some extent by participating in conferences and international bodies. I think that the role of insurance, as it's evolving, really justifies having a heightened voice and a heightened say in this. So because, again, as I mentioned several times, the developments and the evolution of space are migrating somewhat into the commercial arena, and to support that, the insurance becomes much more important. Therefore, I would say it very simply: it's in the insurer's interests to assist the evolution and development of space technology, because that's what's going to create the demand for them in future. So anytime you have an opportunity to assist and drive demand, I think you should take it as a commercial operator. So I strongly believe that insurance has a bigger role to play than it perhaps has played in the past.
Thank you very much. I actually received one last follow-up question with regards to the very first question that you answered on sustainability and the space debris. And it's asking for your opinion on the prospects of on-orbit satellite servicing. So with on-orbit satellite servicing, system failures can significantly increase the risk of collision between orbiting objects. How is the field of space insurance addressing this new challenge?
Yeah, I think you know, I've been around in the industry quite a while, so you know, I've seen projects for on-orbit servicing come and go, actually, over a long period of time. I think it'll be interesting to see whether there is a sustainable business case for on-orbit servicing, particularly as we go into a different phase of technology. You know, prior to the recent new space activity, what had been happening? I mean, well, actually, things have been getting bigger spacecraft, bigger, more powerful spacecraft launched by bigger, more powerful rockets. But now we're getting into smaller, more compact, more expendable units going into space. So if you're Starlink, what is the need that you have for on-orbit repair or servicing of those units? Probably not very much. Pretty unlikely. If you're a big geostationary operator, then the case is much clearer. But the thing I would point to is the economics of it. You know, because you know currently if you're going to put something, you've got to put something else in orbit. Someone's got to pay for that. You've got to pay for the launch, for the in-orbit service capability, and that's quite a big investment. And it may or may not be that you find customers in orbit to service, and I think that's been a constraint. To be frank, I mean, you know, I'm not sure I know enough about the current status of that particular industry, but I can say in the past, going back historically, the economics have been more centered around insuring the risks, and if they go wrong, then you buy a new one and put a new spacecraft up into orbit. I think if there's a case for on-orbit servicing, then that's great. But I'm not sure that in the long term, the way that the industry is evolving is in that direction.
Thank you very much. I said that this was the last question, but we just had another question coming in, which is a very interesting one. So if you don't mind me asking this one before I wrap it up. It came in if there is going to be a life insurance market for people living in the lunar village or on Mars.
Yeah, absolutely, it will be. And I can tell you, I've already arranged life insurance for space tourists. So there were a number of space tourists back in, well, I mean, probably 10 years ago now, but people like Mark Shuttleworth, who went onto the space, we arranged a policy for him. And he bought $20 million of cover, which was the cost of the mission. He paid $20 million for the mission. I mean, what was going to happen to the $20 million? I don't know. I mean, because he wasn't. If it had gone wrong, he probably wouldn't have been able to take another mission into space. And the market provided cover for that, and the market will provide cover for space tourists or space residents in the future. There may be a higher cost, but then there's a higher cost if you for life insurance currently if you work in a certain profession or live in a certain country as opposed to a different country. And so no, I'm very confident. You know, life insurance is an absolutely embedded area, which will extend to space exploration and space tourism and space living. I think the cost may be tailored to the risk, but I'm sure the insurance market will be pleased to provide it. And in a way, when you think about not so much the living on Mars or wherever, but you think about things like Virgin Galactic, encouraging the purchase of life insurance would be in some ways more efficient than going through to a liability environment where in the event something tragic happens, the relatives of the space tourists have to sue and pursue recovery. So I think life insurance may be one way of alleviating the liability environment, which is pretty prevalent in other industries and in particular in areas such as aviation insurance, where we see some enormous awards being made, which are very disproportionate to certainly the economic damage that's been suffered, and particularly in the USA right now. So life insurance, yes, it will be available, and we've already done it.
Yeah. So with space tourism on the rise, the life insurance market will also likely significantly rise. So with this, I think we have taken up all of the questions that I received in the comments. Also a lot of comments thanking you for this very comprehensive presentation. Thank you very much for this. Thank you very much for your time. I apologize once more for the technical difficulties that we had in the meantime, and I do hope that you enjoyed the lecture. We will continue with our lecture series on the 22nd of April with Philippe Brunet from the European Commission. And until then, you can always check our website and the YouTube channel for recordings and everything available. So Mr. Peter Elson, once more, thank you very much for your participation and for giving us an insight about space risk management today.
And thank you so much, and happy Easter to everybody.
Happy Easter. Goodbye.
Bye-bye.